it's a US dollar bearish, and in actual fact, it's quite interesting. I don't know if you have the Indian rupee there on your list, Paul, or the Chinese market, but they both.
I think we do.
So
Indian rupee. Hang on a second. I don't think so. Not on Fusion Markets. Might be there. I don't know. Hang on a sec. Forex.
Julian, while he's having a look, I'm going to read you this question because I love this question, right? Raoul and Hugh explore how gold could perform in a debt deflation and whether central bank largesse is sufficient to help risk assets weather the storm. After thorough investigation and interplay between volatility and price, they contemplate the prospect of a gilded depression, one in which cataclysmic economic disaster is kept solvent by never-ending fiscal stimulus and where asset prices are continually reinflated by incessant injections of central bank liquidity. Wonder your thoughts, Julian.
Well, that's an oxymoron, right? Because you can't have a worldwide depression and then central banks putting as much fiscal largesse into the market because that wouldn't happen then. So thanks, Paul. So if you can just stick that up and just do the last 10 days or something like that is probably
okay. Let's just see if I can find a chart that we can actually make sense of.
Anything that has the Indian rupee on it will show.
In the background, can someone have a look for TradingView as well, please, see if they can find the Indian rupee for us?
Okay, there's 1 month.
I have it. Do you want me to share?
No,
Yes,
that's
please.
absolute. That one's absolutely fine.
That's okay.
And that shows you exactly what you need to see, right? So the central bank has been defending the currency like crazy. In other words, selling Indian rupees to hold it down. They stopped. The market went down a little bit. Then Jackson Hole happened. And then the Indian rupee simply collapsed 3% in the course of 2 days. So, the Indian rupee to the dollar collapsed. So what actually happened when you look around Asia is that there was a big Asian move because the Chinese currency had a big strengthening as well too post Jackson Hole. So it's been very interesting, and I think whilst European currencies have done quite well, ex of the euro, the British pound obviously has done quite well. They've been nowhere near as strong as the Asian currencies collectively. So there's been a collective move. And look, the trend is sort of down. You know, when you look at that chart, you're not really going to try and find, not really going to try and buy it until you get a better signal, right? So some kind of high low, some kind of pattern. So I'm sort of, my view at the moment is the trend appears to be US dollar weakness, other currency strength, and then it's just a question of how you really play that, to be honest with you. So I'm quite keen on the trend continuing for the next few days, and then it's just a question of, you know, trading the price action as you see it, with the caveat that, you know, you've got to be conscious that we're long in the tooth with this anti-US dollar trade. That's pretty much it, really. One of the interesting things about Jackson Hole was that I think was another reason why Powell said what he said. I don't think, if you take his comments at face value, then I'm really scratching my head as to why the US interest rates all fell last week, because including the long bond, I don't understand that. That wouldn't mesh with the with 30-year interest rates falling in an inflationary environment. That makes no sense whatsoever. So therefore, I'm wondering if what he really said was is to influence expectations of inflation. The Fed talks a lot about expectations, and when it comes to inflation, expectations are probably the key driver rather than the actual numbers themselves. So, and the Phillips curve and all these relationships between unemployment and inflation depend upon expectations rather than necessarily the actual facts. So in that instance, you could argue that he's probably more scared about deflation and is really worried about it, and therefore made his comments and said what he said because he's worried about deflation and what may happen after the September federal aid stops, I believe, is when it stops, something like that, which then creates the issue. And that would also mesh with with the way the bond market's working, right? Because the bond market yields went down. Now, if this was all supposed to be inflationary, the last thing that would happen would be 30-year interest rates to go down. It doesn't work that way. So I always tend to listen to the bond market and what it's saying. And then that then says to me that there's a dislocation in the currency market, because the currency moves don't make any sense if the bond market move was very subdued. So then the answer is, well, maybe the currency move did what they did because it's the end of a trend and we're going to have quite an aggressive end to it, or near the end of the trend. So hence my comments about I'm very alive for potential reversal, but at the moment the trend is still for US dollar selling, and I'm going to respect that and try and play that trend as long as I can.
Julian, could I just ask a question in this context, the deflation thing? Because I think I'm guessing, I'm not sure, that they are maybe taking a side at the Japanese yen, because I think the Japanese yen was like a pioneer for zero interest rates, and like more than 2 decades ago, they kind of started zero rates, and what happened in Japan, among others, is very low inflation, deflation, and it's only the recent, I think, year or two where the Japanese inflation started to get above zero, a bit positive. So is that, and now if you look globally, you can see that interest rates around the world, they're all zero, near zero. So is that where the fear is coming from then, that it will follow the footsteps of Japan and pop into a deflationary status? Is that where the fear is coming from? That's my curiosity on that.
Yeah, I think so. I think you may be onto something there. Paul and I were talking about this earlier. I have some caveats around the whole inflation story. I believe that inflation will probably turn up in a couple of years' time, but in the meantime, I think it's going to be a really rocky road. And yes, to your point, is that I think he is worried about deflation. So in other words, rather than saying, oh, there's a real risk of deflation here, so we're going to keep cutting interest rates, he's saying, oh, you've got to be careful about that inflation, Genie. Got to be careful about that. That's the last thing we want to see. Oh, no, hang on a second. No, it is. A little bit of inflation is really useful because it manages to monetize some of the debts and keeps the economy ticking along. And so my sense is here, the pivot is exactly what you're saying, is that I think he's concerned about it. And I think that's that message, that underlying message, I think is possibly being misinterpreted by the markets a little bit. Some of the markets anyway, not the bond market. They seem to interpret it exactly the way I would probably expect them to. This isn't the time for inflation expectations to get out of hand. That's in a couple of years when everybody's re-employed again and we have another think about what the economies are going to do. I think at that point, there's a much stronger argument for a higher level of inflation, but not right now. I just don't see it because there's still much loose spare capacity in the economy. I just don't think it makes any sense that inflation is going to come back in any meaningful way. Could be wrong, but that's sort of my thinking on it.
Cheers, Julian. Thanks for that. Anything else from you before we move along, mate?
No, I think all the markets are pretty much trading the same way. So it's pretty hard to differentiate between any of them, to be honest with you, Paul.
Okay, mate. So we are really on wait and see early in the week and move on from there, right?
Well, I'm bullish, and at the moment the trend is up in quite a few of the currencies. So just trade it as though the trend is up, and that means you're buying minor retracements, small retracements, looking at things with the very conscious in mind that this may be the last leg of the move. We don't know that. The last leg of the move might go 4 big figures. So, we're just trying to play it. It was a pretty strong day on Friday. I'd be surprised the market opens down, but I think if it opens down, that's probably an opportunity.
Cheers, Julian. Thank you very much for that. Okay, time to talk about, sorry guys, I'm just reading an email in the background to see if there's some stuff in here about what's happening this week with new shows.